Hello traders, it is Monday, August 11th, 8:01 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. Lots of it this weekend. My notes here. Reduced negative geopolitical news is said to be giving investors more confidence to move back to riskier assets. So we have this pop overnight from the Asian session into the European session. Fed's Fisher says global recovery steady but disappointing. Says U.S. housing sector and weak foreign demand weighs on recovery. On that note, this came out at I think 3 a.m. Central Time. On that note, U.S. Treasuries briefly popped higher on these comments, comments seen as dovish in support of housing possibly. The U.S. has begun arming Kurdish forces in Iraq. Here we go again. We're arming a foreign entity who hopefully one day will not become our enemy, using our own weapons against us. China, July CPI in line, 2.3% year-on-year. PPI in line at negative 0.9% year-on-year. The People's Bank of China will stop daily FX intervention at this point, according to lead PBOC researcher. This is a big deal for the foreign currency market. Ukraine government forces making progress towards recapturing Donetsk, where most of the Russian insurgency is held. Donetsk's PM says conditions are dire. Russia calling for humanitarian mission to East Ukraine urgently needed. Merkel and Obama agreed that any Russian mission into Ukraine without Kiev's approval would trigger more consequences for Russia. Russia certainly feeling the pain of sanctions. Israel and Palestine agree on another 3-day ceasefire, which started yesterday. And the U.S. continues airstrikes in Iraq. As far as economic releases, there are none today. We have a 3- and 6-month bill auction at 10:30 Central for 29 and 25 billion respectively. Also, just because it's Monday, let's take a look at the week ahead. Tomorrow, Tuesday, German zoo. This is a key number. We also have a 3-year note, 27 billion. Wednesday, we have German CPI, China retail sales, industrial production, UK unemployment, BOA quarterly inflation report, U.S. retail sales advance, and U.S. crude oil. Fed's Dudley, Fed's Rosengren 10-year auction for 24 billion. So tomorrow's a pretty busy day, or Wednesday's a pretty busy day. Tomorrow's pretty quiet, except for the zoo. And then on Thursday, we have French and German GDP, ECB monthly report, the European Union CPI, U.S. initial claims, U.S. import prices, and EIA natural gas, and a 30-year $16 billion auction. Friday is pretty quiet, except for UK GDP, US Empire Manufacturing, US PPI, US tick flows, US industrial production. All of those are low importance figures, except for the UK GDP. But we do get University of Michigan preliminary in the morning on Friday, which is a medium importance number. So that's what's on deck for the week. Again, geopolitical risk is fairly high, so need to stay aware of that. As far as Friday's action, so our job now is to look at what has happened on Friday to determine what its goals were, and what it was trying to do, and then to assess how good of a job it did. Did it find the buyers it was searching for? Did it find the sellers it was searching for, and so on and so forth. So Friday opened as expected on that trader bite. The primary hypothesis for Friday was an open auction in range with a potential for a drop down to 1903 being the extent of the drop. as mentioned on Friday, and then the cap on the upside would have been around 1750. 1750 on Friday. I expected the range to be in it and contained. And then what we got on Friday is an open auction in range as expected. Tested the prior point of control fairly early at 105, and then the market just chop, just as expected. So pretty. Friday was pretty in line, except that at about 11:45, the Russians announced that they are withdrawing their forces from the Ukraine border because their military exercises had ended. Remember, Russia had about 45,000 troops and about 160 tanks on the border, and what they did is they basically said, well, we were just doing a routine military exercise. And with that, we have a quick pop to 1750 to the LVN, very tiny pullback, just 6 ticks, and then off to the races it goes to test the high volume node left behind from Thursday, and then the market proceeded to just go sideways here to build a nice HVN. Once the HVN high volume node had enough compression in it, we had a continuation move out of Thursday's range and into Monday's range. And then the market closed in the upper quarter of the range with the point of control at the high. So in those conditions, those are trend-like conditions, and in those conditions, the expectation is immediately to expect follow-through. Essentially, the market did not finish exploring higher prices, except that it ran out of time. So generally, with that point of control shift higher, there's a lot of interest on the top. Pretty poor high. Look at that high, very, very blunt high. And then we had our sell-off on the close that I've been talking about all week, last week, or actually for the last 2 or 3 weeks. Markets consistently selling off on the close. You might want to look at that. There's an edge there, in my opinion. But would the market continue higher overnight? And the expectation, I think I was on day trading radio on Friday at the close, and I was saying that the expectation is for it to continue higher, and 33.50 is the next target up. The market ended up pushing to 35.50 overnight. It's currently trading 34 with a point of control at 33, just off of the 33.50 point of control left behind on Monday. So we're templating Monday's range right now with this MCLVN. You can see the MC here, the microcomposite for this zone is right here. I think I moved it to the front, but let's color it something different so we can see a little bit better. So you can see here we're in this LVN zone right here on the MC. Okay. And that's where we are. So that's the story for Friday. Friday, from balance to seeking sellers, it was unable to find sellers, so it trended up and it continued to push higher overnight. The market has found a base based on Friday's action, has found the buyers it needs to keep going, and has found the value that it needs to push higher, or the prices that it needs to resort to pushing higher. So this morning we're looking for, let's look at the overnight inventory, or let's look at what happened overnight. Fortunately, Windows 8 creates these bulky windows, so I can't see the titles before I open these. So here it is on the open, zip right up from 23.50 to 29.50, very, very quick in the first 15 minutes, and then pretty much sideways through the Asian session, and then starts to trend up through the European session to have a pretty decent looking low. The low the market is in an open drive on the overnight session. Low looks fairly strong. with a weak high. The expectation, though, depending on how it does between now and the open, which is about 19 or 18 minutes, the expectation is for the overnight high to be taken, but also for the market to uh, balance this overnight inventory and start to push lower. So we're expecting responsive sellers on the open, but very weak and very brief, in my opinion, in that the context does not support a strong push lower overall, given the way it bounced up. So here's a view of where we are in the big picture. This is the upper balance that we've held throughout July. So from July 1st till July 30th, the entire month, we were in this 45 to 85 range, 40 points on the day session. Remember, these bars are all day session bars. So we had a 40-point range for the month. Then on the 31st, we broke lower. We broke lower on several pieces of geopolitical news, and then we tested the prior MC to that, and are holding in there. So here's the MC. There's the gap. So we pushed right into this MCHVN on the downside, and all the way through. Very thorough test down to 99.75. Prior MC low at 96 and a quarter, which is the top of the gap. And the market's having a reaction up and is trading up towards the upper end of balance. So today, 37.50 is going to be very important. A breach of 37.50 has us looking at the trend day down and then targeting 45.75 above. That's what I'm looking at for today. So I'm expecting a small test lower today to balance the overnight inventory and to kind of retest the towards the prior acceptance range. And then I'm expecting a retest at 37.75. We have left, and I've marked here, you can see it on the chart, on 8.8, we have an LVN zone that we've left behind, which sits right on top of that 1675.17 composite low volume node. This is an area that's been playing all the time. See that on the micro composite right here? So this divot right here has been carrying forward for eons. Ever since we've been up here, it's basically formed back here, retested right here, okay, to create this composite LVN. There's nothing ahead of it. See, there's no action ahead of it, but the composite LVN was formed, and it has continued to hold an LVN throughout this this balance period. So we've got LVN low volume extreme here, an excess down here. We have an LVN on this day. We have an LVN on this day. We have an LVN on this day. We have a big LVN zone on this day. So I'm marking this area, and I've used this area all last week as an over-under line to gauge who is winning. The only day that actually tried to fill some of it was Wednesday. We opened and kind of traded quite a bit in here, but still it left us with a small LVN on Wednesday as well. So you want to mark that area, in my opinion. So that's what I had for you. Again, headline risk, we have Iraq now being armed by the U.S. and U.S. airstrikes. The U.S. is saying it will not put boots on the ground without some discussion with NATO and the UN. It is arming and supplying humanitarian aid to parts of the Kurdish parts of Iraq, and then also the PM of Iraq, who unfortunately has created a government that is leaning very in one direction and is causing this backlash by ISIS, which is a Sunni-based group. He was supposed to appoint the next PM, and he's pushing for a third term. So this guy's looking more and more like a dictator. So the U.S. is behind him, though, and is in support of stability in Iraq, but this could get ugly. The Ukraine is calming down, and so is Israel, but we still have that headline risk. Anything could happen at any time of the day. And also, I noticed that days where we don't have numbers, we have a very quiet session. The news wires tend to be a lot busier. So just keep an eye on that on your news feed, or check out financialjuice.com for a live feed that you can filter and so on. So at least you know what's going on. Good luck today. Remember, it's Monday. It's a full week. Um, this is the time when you're supposed to set your goals for the week. Find out, just like we do with the market, find out where you are as far as your performance. I use expectancy and ticks to determine performance on a large sample. Figure out where you are and figure out where you would like to be within reason by Friday, so that you have something you're working towards, and it helps you. And the key element is it helps you control risk, and it helps you filter bad trades. If you don't have a goal, then pretty much every move looks like a trade. But if you know that you have to meet a certain goal, and that goal's hurt very badly uh, by a lapse in your risk control, then you're likely to be more selective and more goal driven. This is something I learned a long time ago when I was struggling to make the turn in trading. I think my performance changed completely once I created a trade summary report that tracked what my expectancy is and what my statistics are. Anyway, I'll leave you with that, and I'll catch you tomorrow. Good luck today. Take care.